Hello, Forex Mentor Pro members, my Forex friends. I hope everybody's doing very well. I just want to reiterate how wonderful all the feedback and comments have been. Really appreciate it. Mr. Mark Walton is still on vacation, so I will be guiding you through this week's trades once again. We had really nice results last week from the weekly analysis. Let's see if we can't follow it up with some more great trades this week. When you guys speak, I listen. So two criticisms, or I guess areas of improvement, were the microphone and the fact that I had not properly displayed the pair on the chart. So what I'm doing this week is A, I bought a new microphone, so sound quality should be much improved, and B, I'm putting a little label for each pair that I'm covering, so if you are just glancing at this and listening to the audio, you'll be able to see it. Without further ado, let's get rolling. This is going to be Forex Weekly Analysis for the week starting August 12th, 2013. First and foremost, here we have the Euro USD on the weekly chart. Now, last week I said, watch out between 3,300 and 3,400. We never broke above 3,400, which I was not surprised at all, although we did dip below 3,300. We ended the week inside this trend line, and other than this area here, the triangle has been very intact. We are kind of in a high traffic zone. We have the 55 EMA, we have 3,300 as a support and resistance. Finally, the trend line, and we're going to get down to lower time frames, but from here you can see we had another bullish week. Price stopped dead cold at 3,400, and I really hope some of you caught that trade. That was really easy. Going forward, it gets a little trickier, but that doesn't mean we can't find good trades. Let me go ahead and take it down to the daily chart, see what we're looking at. Okay, now here on the daily chart, you can see that price did rise above 3,300. Never really pulled back on the daily level, blasted through the trend line, hit up on 3,400 and shot right back. Now, from this daily candle formation, what we have is a railroad tracks formation just about. It's almost perfect. And that is a specific type of engulfing formation where the following day or period is the exact same size essentially as the one before it, but it reverses position. Now, since this comes at the end of an uptrend, and since the Bollinger Band here at the top seems to be shutting, and since we have hit a very important technical area of 3,400, my first inkling of what would happen next is that price should fall. Does it mean that's what's going to happen? No, not necessarily, but I should be ready for that occurrence. The only problem is that right below where price is now, we have both this 55 EMA and this horizontal support and resistance being the whole number of 3,300. So for me, I would not be interested in shorting this pair from where it is, but rather I would prefer a breakout of 3,300 to the downside. So we would want a breakout of 3,300, pull back for retest, and then on we go down to 3,200 would be my first area where I would want to manage my stop. So I'd be either taking a good portion of this trade off the table because it might bounce right back, or I keep some on and wait for a further breakout. But keep in mind that we have lots of things below, such as the 55 on the daily, 200 on the daily, and a Bollinger Band here. So again, if we were going to take this short, I would think that we'd need a breakout of 3,300 first. Alternatively, since we know 3,400 is an important area of support and resistance and has capped price before, we would just wait for a pullback to 3,400 for another potential short from that area. Keeping in mind that we would need to get out of the trade or manage our stop as we approach this trend line again, or as we approach 33.15 and then finally 3,300. It looks even clearer on the 4-hour, and let's check that out now. Here on the 4-hour chart, we see some really nice trade opportunities we had. last week. So as we broke out here of the trend line, it came back, pulled back perfectly, and away we went. So for those of you who went with the trend, bravo. On the way to 3,400, we should have known, as it was a prior area of major support and resistance. It played that way again. And I said look for shorts at 3,400 if price got there. What happened? Touched off 3,400 and then reversed about 60 pips. So that was a good short. So in one, in 1 or 2 days, you could take a long and then reverse your position almost where you started the long and make a short almost all the way down. Going forward, there would definitely be, again, since we have so much below us, I would definitely want a breakout of 3,300 to the downside to take a short, potentially pull back to 3,400 for another short, although the more times it tries to hit it, one of these times it may just break through. It being summertime, that may take a little bit longer to happen, or it may not happen until fall. So alternatively, if we're looking to go long, we wait for a pullback to the trend line and possibly this area here, or we wait for a breakout of 3,400 with a pullback to go long. And that's going to do it for the euro at the moment. Let's check out the pound. Here is the British pound versus the US dollar on the weekly chart. Now we can see from this last week, we had a nice bullish move. Our areas of focus were, of course, 52.70 to take some longs. I had suggested that possibly shorts from 54.25, as price did seem to be bouncing off that area before. Unfortunately, that was wrong. We had a 326 pip move, I believe on Wednesday, and it just blasted right through that area. Where did price stop? Well, interestingly enough, it stopped right at the trend line and also below the 55 EMA here on the weekly. So the one thing to note is that the upper Bollinger Band is starting to swing open, which may suggest a higher move up. But we still have this weekly 55 EMA and the trend line to get through. And then right after that, we have 5,600, which is both a fib and a very strong area of support and resistance. You can see it's played just in the last little bit a role in containing price. So it is an important area. Let's go ahead and get down to the daily charts to get a closer look. Here is the pound on the daily. Now, as we went through the week, Monday provided us an excellent place to get in at 52.70. We rose up, had a doji, and then Wednesday was a wild, wild ride. For those of you who look to get in long again at 52.70, you were in that trade. Problem is that the price went down all the way to 5,200, so that exceeded where I had my stop, and that was a loser. What did it do right afterwards? And frustratingly so, shot right up. And not only did it shoot right up, but it just blasted right through 54.25. We ended up coming to rest under the 55 EMA and the trend line. So in fact, we can see this even better on the 4-hour chart. And so here's the 4-hour chart. You can see that with the big move from Wednesday, we made it, just never had a chance to pull back to 54.25. So that brings me to the first trade I'm looking for in this coming week, which is going to be a pullback to 54.25, which is also a 200 EMA. So first trade I'd be looking for, as price hopefully comes back down to this area, is to take a long, keeping in mind that we need to manage the trade as we get close to the area of this 55 EMA and the trend line, which are going to be even closer together as price moves forward. Then, if price continues to move up, look for a breakout, pullback of this area, finally heading on up to 5,600. For counter trend traders, you'd be looking for a short at 5,600 for a potential bounce trade. If you would like to stay with the trend, then what we need is we need a breakout of 5,600 followed by a pullback to go long. So we look for the break, the pull, and then the long trade. If this pair does turn around, it looks like it's a lot tougher to get down. Here we have on the 4-hour, we want to re-break below 54 and a quarter, but we have this 55 EMA and finally 200 EMA that's going to give us fits. Eventually, possibly going back down to 52.70, but I see that as less likely. The pound does seem to be on a pretty strong uptrend. So look for longs around 54 and a quarter, breakout of the trend line and this EMA, and then finally a breakout long of 5600, which may or may not happen. It is still the summer. We'll have to see how powerfully the market decides to move. And I've gotten questions from a few of you about stop losses. I do try to be conservative. So if I am looking for a short, let's say, under this trend line and this EMA, the first place I'm going to look is not only using this as protection, but I'm looking to a recent high. As we know, price does tend to struggle to make new highs and lows, so this can also be an area to put your stop behind. It does end up making your stop bigger, which even though we're always using the same risk percentage, our lot size does change. So stop size does matter. It's not that we're ever going to risk any higher on a percentage basis, but it makes it harder to get a positive reward risk ratio. If our stop is only 10 pips, then we only have to make more than 10 pips to have a positive RR. If our stop is 100, then our win has to go at least 100 pips to put us positive on the reward risk ratio. So when selecting a trade from a number of trades, that is certainly one thing to consider is, where is my next potential take profit versus how big my stop is. But regardless, always try to protect your stop in a smart area, not based off of pips. You should never look at it as, well, I only want a 10 pip stop, so no matter where entry is, I'm giving it 10 pips. That will lead to more losses, in my opinion. It's much smarter to take a bigger stop loss and a smaller lot size if you can protect your trade with good areas, such as, in this case, it'd be 3. It'd be the trend line, the weekly 55 EMA, and finally a swing high if we were shorting from this area right here. And if you can't find areas of multiple protection, it's just the same as, do I want to take the trade because of multiple reasons? Well, your stop should have multiple reasons as well. That gives you the maximum amount of protection, so you're not going to be taken out by market volatility. That being said, there may be some better trades lining up this week than last. And let's check out the Aussie. All right, here's the Australian dollar versus US dollar on the weekly. Now, last week we were looking for shorts from 9,000. From this weekly candle, oh, that's a terrible, terrible trade to take. Actually, this was one of my better trades that I had for last week. And I noticed from some of your comments that many of you caught this trade as well. That's why, different time frames give us different perspectives. Certainly, from this time frame, it does appear that price may be reversing, or at least coming back for a pretty sharp pullback after the prior week's hard fall. We did end up going below 9,000. Let's go ahead and look at it on the 4-hour chart because it'll give us a little more clarity. All right, here we are on the 4-hour. Now what we did get is initially we got a pullback to 9,000. We had a couple different areas to get in this trade, and then we made a nice fall down to the 8,900 area before price reversed and headed back up. Boy, once it headed back up, it went. And so now we have broken back above 9,000 and 90.40 and headed back almost up to 9,200. Let's go ahead and zoom out to the daily chart and see what we can find out. All right, here's the daily. Had some pretty strong moves up, and now we've stopped cold at 9,200. Interestingly enough, 9,200 has been a pretty strong area of support and resistance before, and this may halt price. So I would definitely be looking at smaller time frames to take this trade. And of course, when in doubt, stay out. So my first initial reaction would be to short under 9,200 if price really does struggle with this area. Alternatively, I'm really interested in shorts at 9,300 and 93.25. If you are going to take a short at 9,300, do place your stop above 93.25, as both 9,300 and 93.25 have been important areas over the past few weeks / months. So because I feel this is still in a downtrend, my preferred trades are going to be shorts at 9,300, maybe 9,200. Of course, if I do see that price falls, I'll be looking for bounce trades at 90.40, finally 9,000. As if we are moving in an uptrend, those would both be logical places that price would pull back before continuing on upwards. You can see from the daily, we have a 55 EMA in between 9,200 and 9,300. That may be as far as price gets before turning down again. But if price does reject the 55 EMA, I would definitely wait for price to pull back below 9,200 with a retest of 9,200 before taking a short. I would not short from the 55 EMA alone, but having that as wind to your back after price falls and rejects that area and heads below 9,200, it might be a real nice place to hide your stop behind. So although I wouldn't take a trade there, it definitely would give me more reason to think that after a fall below 9,200, I should take a short and then put the stop loss below. So for this week, look for pullbacks to 9,300 or 93.25 for shorts. Look for potential shorts below 9,200 if price cannot get above that. And then we can always look for the bounce trades at 90.40 or 9,000 for counter trend traders. Now ultimately, if we get into this week and price just absolutely falls, we will definitely look for 9,000 to break again, pull back to 9,000 for a short, keeping in mind that price does seem to stop at around 88.70 area all the way down to 88.40. So the Aussie is still pretty cut and dry, and it does seem to be coming back inside its range again, and that range does seem to be between 9,300 and 90.40. On to the next pair. Next in line is the Euro Pound, and here it is on the weekly. We can see that the triangle upper trend line did hold, and that we have a rather bearish candle to look back on for last week's action. But that doesn't tell the whole story. We were looking for a potential upside breakout considering the week prior, an upside breakout of the upper trend line of the triangle, or pullbacks to 8,600 for a long. Now this is usually when people ask me, hey, what's an easy pair to trade? I usually point them in this direction. Right now this has not been the kindest, gentlest pair that it usually is. And let's check out lower time frames to check that out. But we can see from the weekly though that the Bollinger Band, although is close to the pair, still seems to be open a little bit, but might be closing, so that may hold this pair down as well. Let's check out the lower time frame. So here we have the pair on the daily chart. You can see that Monday produced a fall, Tuesday rose back, and then the craziness that we saw in the pound on Wednesday produced a spike. It made it almost to the top of the trend line. Now sure, I'd love to say, hey, I had a short waiting there for it, but I didn't. I was looking for an upside breakout of this area, or I was looking for a pullback to 8,600 for a long. Did we get a pullback to 8,600? You betcha. Ended up bouncing off just a touch, and then coming to finish the week settling down. Ended up closing this trade at close to break even for not much of a win whatsoever. Going forwards, I would certainly be interested now that we are at 8,600, since it is a daily 55 EMA and a strong area of support and resistance, that we continue on thinking about taking this trade. So I would like to, on smaller time frames, I'm going to see how this pair reacts to this area, and one of two things is going to happen. Either it will stall and eventually turn back around, or we will get a clean breakout of 8,600, which we get a pullback and then a short down to the trend line, which is just a little bit below 8,500. It's also going to be a daily 200 EMA. For longs, we look for longs above 8,600 all the way up to the trend line, and maybe we get that trend line break finally. So again, pretty much the same trading profile as the beginning of last week. But be cautious, since we already are at 8,600, that you don't just jump on this trade. Go down to smaller time frames, like here on the 4-hour, and you can see we're very, very sideways. What we could do is, since this seems to be an area that encapsulated, is that we have an upper area here, lower area of 8,600. This is also for our 200 EMA, and what I'm looking for now is a breakout of this area here, or a breakout of this area here, to get out of this kind of this sideways zone. Once we get a breakout of the area, look for a pullback, and then away we go. And of course, this area that I'm speaking of is going to be at 8620. So look for breakouts above 8620 or breakouts below 8600, and that would be a good way to trade this pair. To be cautious that we don't take a long at 8600. But let's go ahead and check out those good old yen crosses. Okie dokie, here is the US yen on the weekly chart. Last week we talked about bounce longs off 97.5, maybe pull back to 100 for a short. The 97.5 worked if you were nice and aggressive in moving your stop. Otherwise, that was a loss. This is why it's crucial, especially during these summertime periods, to move your stop and not go for the big home runs like we normally would during the spring and fall. Here we can see we definitely had a very bearish candle. Stayed within the triangle, but broke out of this new little weekly channel that I had created. And we can see this very clearly from smaller time frames. Let's go ahead and go down to the daily. Down here on the daily, we can see that the trend line actually played a very, very important part in this week's trading towards the end of the week. So we came down, broke through the trend line, had just a gorgeous pullback to the trend line, which fell further. Did I catch the trade? No, actually I didn't. Wish I had. Starting to get a little too sketchy on this pair. I wanted a little more clarity. It's pulled back again to the trend line and now pulled below. So where do we go from here? Well, keep in mind that we have that weekly trend line very close, as well as a daily 200 below, and that's going to be, I believe, it's going to be around 95.5, while the 200 is at 95. So as we approach 95.5, definitely be looking for bounce longs there. Alternatively, we can always wait for a pullback to the trend line again, or all the way up to 97.5. As I mentioned before, we did have an opportunity to trade 97.5, but it was a very, very small window. We had price come down, bounce off it a little bit before coming back through 8 hours later and breaking it, to which actually we had the opportunity for a pullback in a short from 97.5, but I missed that one also. So going forward, there does seem to be a lot in the way, but if we get a pullback to the trend line, which is going to be now the nice whole number of 97, we'll look for a trade there, and we'll go ahead and put in a horizontal support and resistance line to mark. It does seem to be a pretty important area. And we will look for shorts from this area here between 97 3/4 and 97. That would be the first area I would look for a short. If everything breaks up through, I would definitely wait for a long above 97.5 before taking a long. Seems to be a lot of things going on the US yen right now. So if you're not confident with the trade, stay away from it. That's why we look at all the crosses. And speaking of which, let's check out the euro yen. And here's the euro yen on the weekly. As you can see, we had a rather bearish candle, and we broke some pretty important areas. First and foremost, we broke this weekly trend line I've had in place for quite some time, and it has held price for a while. As I zoom out, you can see this. Let's see, this weekly trend line has really held price pretty much all year. And now we have a weekly breakout. That's pretty solid. So now we're going to have to look for trades. But as excited as we are about this weekly breakout, because normally there wasn't so much in the way, I would say, well, we've had this really important area of 130.70, which I hope some of you caught. I know it may have been a loss for some, but the breakout pullback to the short side did end up being a big win. And that's why we can't hesitate once we have these areas planned out, that if it doesn't go one way, you can always trade it the other direction, but don't take that third trade. So I would say normally just wait for a pullback to 130.70, and away we go all the way down to 127.5. And fortunately, we have this monthly 200 EMA that may end up holding up price strongly. So let's go ahead and look at a smaller time frame like the daily. Aha! So the 200 EMA is important. We can see from the daily chart that this has come into play already. So we broke below the 200, had a pullback on Thursday. Friday's price action headed lower. So this would be the first place that I look for yet another pullback, is going to be this 200 EMA, which at the current moment is 129.38 area. Again, we also have a daily 55 right above, so we'll be placing our stop somewhere here and take a potential short from this area again. If we do re-break the 200 EMA, the monthly 200 EMA, I would look for pullbacks to 130.70. At 130.70, I'm going to be pretty darn interested to short this pair again, if we do make it back up that way. Again, we'd have to manage our stop as we come into the 200 and on the way down. 127.5, if we do not pull back, is where I would look for a bounce trade back up. If you want to go counter trend, for everybody else that wants to trade with the now seeming downtrend, we would wait for a breakout of 127.5, followed by a pullback, and then a short. So there's quite a few different options on the euro yen if we want to trade it. Also, now that we're down on the daily, we can start adding in some new little trend lines. Add one here, and add one here. So we have this to work with as well. And that does create kind of a squeeze in between the trend line and 127.5. So if you don't like the breakout of the trend line, wait for the full break of 127.5 before shorting. But it will give you a pretty good indication, if this trend line breaks, that we may be on for a further fall. Pull this back a little bit. And there we go. So again, a pullback to the top of the trend line would put it underneath 130.70, and if it happens pretty soon after market opens, like Monday or Tuesday, we'll have this nice crux of the trend line and that 130.70 area. So definitely watch 130.70, 127.5, and this 200 EMA, which is currently at 129.40. And other than that, the euro yen does seem to be in a downtrend for the moment, but with the volatility we've seen this summer, it can reverse position rather quickly. Here is the Aussie yen on the weekly chart. Now at the beginning of last week, we had discussed two specific areas for price to work with. And the first one was the pullback to 90, which was really kind of my preferred trade, as this had been both a trend line, a major area of support and resistance, a whole number, Lots of stuff going on there to give me a great idea to go short. I said alternatively, look for long trades at around 86.30 first of all, maybe down to 8600 right below it. Oh man, that one worked out great. It came roaring back almost 200 pips. I said there was a lot of stuff to be holding price up. We got EMAs galore, we have a fib, we have a whole number of 86, and it worked out fantastic. We'll see it even clearer on the daily chart. Hang on. Here on the daily, you can see what we did last week. We never got our pullback to 90, stayed below 89, but Wednesday came back and almost touched down to 86.30, got down to 86.40. Some of you may or may not have gotten in that trade, and then bounced right back for Thursday and Friday, snapped right back up to go along with those big moves on the Aussie USD. So, okay, so what do we do from here? Well, again, we're pretty much dealing with the same situation. Again, we may be looking for a pullback to 90, which I'd be interested in a short. Alternatively, if we head back down, look for more longs at 86.30 or 8600, and that should keep this pair pretty easy to trade. We may only get a pullback as far as 89, but because it's just a singular area in the sense that all we have is a support and resistance, I wouldn't just take a trade from that area. But we should see how it reacts to know what may happen next. So the Aussie yen, 90 and 86.25. Everything else in the middle, in my opinion, is no man's land. And let's check out the Looney Tunes of them all, the CAD. Alright, cue the silly music because we're about to discuss the silly pair. Now, looking from this, remember I had said at the beginning of last week, oh, short from 1.0400, that looks like a great place to short from. And if you look at the weekly chart, man, I was right? Oh, but it wasn't that simple. Let's get down to the 4-hour and we can just see how loony the CAD is. So here on the 4-hour, we can see what I'm talking about. We did have the pullback to 1.0400. Great. Take a short. Nope. Blasted right through. Of course, you know, some of you might be using rather large stops, and if you had your stop above 450, you may have stayed in this trade. But to me, once it broke through, it looked like it might go long. So what? We take maybe a long from 1.0400, and it went on. Maybe you were able to manage your stop, maybe not, because it broke right back through. And we got no pullback to 1.0400 and just plowed through all these EMAs right on down to where I had finally thought we might be able to take a long. And if you long from this area, you probably got a win out of it. It went about 20-25 pips up, and now it looks like it's starting to head back down. So this is a tricky pair to trade. I know some people have great success with it. I personally have never had much success with it, but I like to do the analysis nonetheless because it does help with other pairs. So let's go ahead and go back to the daily and see what we can figure out. So here we are on the daily, and price now has pulled back to this trend line and the 200 EMA. This would be the first place I'd be looking for longs. And so again, look to smaller time frames and see how it reacts this area. But definitely we could be looking for longs at around 1.0275. Alternatively, we could wait for a pullback up to the 55 EMA here at 36. It's 1.0365 and 1.0400. But again, that was a shaky area to begin with. So maybe if you want to take the short at 1.0400, make sure that you have your stop above 1.0445, which of course could be an area in itself. But again, I'm more interested in this area down here. If it breaks below it, then definitely we could look for a pullback to take a short. Then we have the 200 EMA on the daily. Now sometimes there's a lot of open space when you're trading, and sometimes there isn't. This is just one of those cases. And again, since it is still summer, you know, actively manage your trades. One thing I don't like is look at the Bollinger Bands. they do seem to be getting tighter. They're pretty wide over here, pretty far apart. They're getting a little tighter, especially the upper Bollinger Band. So as price starts to squeeze, we may start to see some lack of price action on this pair. Overall, though, I think we have a good chance along pretty close to where it is. And for shorts, look back up above 1.0400 or at 1.0400. And that's about all I have for you. Of course, always leave your comments, questions, or suggestions, because I'm always happy to hear them. And thank you very much for joining me on this weekly analysis. I wish you the very best in your trading this week. And let's go out there and get some pips. Talk to you soon.